Hey guys, today we're going to talk about fixed indexed annuities. Okay? Fixed indexed annuities are a deferred annuity. Okay, so we're trying to grow our money for long term for our benefit later on in life. The benefits of these are going to be some tax deferred growth, just like the other annuities. You're going to have the ability to have a pretty nice little fixed interest rate, just like a normal fixed indexed annuity. Not as high, but it's a little bit better. But the bigger part why you do this is you have some stock index-like returns. So basically it's like having part of a S&P 500 fund, okay, that you can participate with some of the upside, not all the upside, but some of the upside, usually with a cap. So it could be like you're going to participate with the S&P 500 up to like, let's say 8% or 10%. It's a much better return than a fixed annuity. But the downside of this is you're not going to get all the upside of the S&P, but the benefit is you're not going to get the downside of the market usually. So for example, let's say the market's down 20%. Most fixed indexed annuities, you don't make any money that year. You don't lose anything, but you don't make anything that year. So you're not getting that huge drop in the market. The following year, the market recovers. It's now up 20%. You're stuck at, let's say, 10%. So now you make a 10% return. You're not getting all that volatility of the market. You're getting some upside. So it's basically in between normal stock investing and a normal fixed annuity. So you're going to have the opportunity to make a lot more than a normal fixed, but not nearly the downside risk that you're taking on with normal investing. So there are some significant upsides to that. Benefits will begin later, just like normal deferred annuities, just like the other ones. You can either liquidate the annuity, take your money and run when you're happy, when you're all done. Start taking payments as a pension for your lifetime. You can surrender it for a better policy. There could be new ones that come out later on. You just want to switch it out. It's called 1035 exchange. Move to another annuity. Keep it growing free from taxes. If your existing policy is still really good later on, just keep it. So you have other options when some of those guarantees start to go away. This is generally the second cheapest annuity when it comes to internal expenses. Again, the fixed annuity is the cheapest. This would be the second cheapest. If you're a more conservative investor trying to grow your money, don't want to have a lot of downside in the market, fixed index might be a good tool for you.